We're delighted to open this this year's conference, with a morning dedicated to Discovering Cayman, sponsored by Clearwater Analytics. Thank you, Clearwater, for your sponsorship. We had an overwhelming response to this morning's session. We couldn't get the ballroom for the event, and we had more responses than we had seats for. So we're live streaming the event as well. So welcome to those that are attending by live stream from their offices, mostly in Cayman. And welcome to you that are here in the room. I'd like to acknowledge at the start some important people that are here with us today. Anna McLean, Chief Supervision Officer at Cayman Islands Monetary Authority. Thank you, Anna, for being here. Her colleague, Kara Ebanks, the head of the Insurance Division. Greg Mitchell, who is chair of CERCA. I think, is Greg in the room? He was out in the hall, but he's here as well. We're honored to have some of the U.S. state commissioners here with us today, and you'll be hearing more from them tomorrow. We're excited about their contributions tomorrow, so thank you. My name is David Self. I am the General Manager for CERCA, and it's my pleasure to be your MC today for the Discover Cayman session here at the amazing Ritz-Carlton Grand Cayman. First of all, on behalf of CERCA, we would like to give you a big thank you to many sponsors for this year's event, including our premier sponsors, Cayman Finance, Camana Bay, the venue for this evening's amazing cocktail reception, and the Ministry of Financial Services and Commerce. And as I mentioned earlier, a special thank you to Clearwater Analytics who are sponsoring today's Discover Cayman session. Grant Thornton, who are sponsoring this afternoon's catamaran cruise, and to Appleby, who are sponsoring this evening's welcoming cocktail reception at Camana Bay. I'm sure you'll all look forward to that, as I am. We have over 45 sponsors for the conference this year, and we're grateful to all of them. Before we get started, though, here are some housekeeping items. Please turn off your cell phones. You might want to leave them on so that we can use them for some of the technical stuff in the course of the day, but if you could turn them to silent, that would be great. You should have found on your chair this morning's program, which includes details of today's run of the show, our sponsors, and our exhibitors. We have a separate program for tomorrow, so you won't find that on what you see on your chair. We're delighted to have so many outstanding speakers and panelists joining us today and tomorrow, and full biographies for all our speakers can be found on the CERCA website, cerca.ky. We are delighted to have the Cayman Islands Monetary Authority outside as well. Their booth is right outside this room, and they'll be there for the next 2 days. And with more than 20 exhibitors, they'll also be in the foyer outside the ballroom, at the entrance to the ballroom foyer. Please make sure you wander around and visit all of the exhibitors. Our coffee and tea today is located just outside. I think you've mostly found that. Outside this is called the Rembo Room. There will be a short morning break at 10:45, and we will be finishing at approximately noon today. If you're joining us for the catamaran cruise this afternoon, please ensure you collect your wristbands. They look like this. You might have a different color. There's 3 different boats, so there's 3 different colors. I'm on a blue boat. And you can collect those at the registration desk, so it's important that you get registered before the events this afternoon. Likewise, please collect your wristbands for golf. If you're lucky enough to be a good golfer, I am not, then you'll have a different color for the golf. Please note the changes in the arrangements for the catamaran cruise. We are now departing from Safe Haven, and you don't need to know where that is, but it's not from the beach at the Ritz due to the weather, and it will be departing at 2 p.m. from Safe Haven. If you're registered for the cruise, please be at Safe Haven for 1:45. If you have your own wheels, 1:45 is the designated time, but we have buses running from the Ritz, and please be at the front of the hotel at 1:20 for a bus transfer to Safe Haven. The evening at Camana Bay, your name badge will be your entrance to the reception. Without you needing to check in there, you can just walk in if you have your name badge. So do save some time to get registered and collect your badge so that you can get into the reception easily. We will be taking questions from the audience through Slido, an online platform. Please use your phone to scan the QR code. We have the QR code up here? No, but I think it's on the material on your chair. You can see it on the screen as well when it comes up there. If you have any difficulties, please just ask a member of the event team. They're all huddled at the back. Wi-Fi for the events over the course of the next couple of days are sponsored by New England Asset Management, Inc. The network name is Ritz-Carlton_conference, and the password is NEAM, that's NEAM 2025. And you will also find this on your name tag and in the program. Now it's
Great. Can everybody hear me okay? Fantastic. Welcome, everybody. My name is Jacob McAdam. As David mentioned, I'm a partner at Appleby. I co-head our reinsurance team here. I'm based in Cayman. I've lived here in the Cayman Islands with my young family for nearly 15 years. Prior to moving to the Cayman Islands, I was a corporate finance lawyer with the US firm Gibson, Dunn & Crutcher, based in London. I am delighted to be your moderator here today. And trust me, folks, you're in excellent hands with a really stellar panel today. I'm going to introduce each of them in a little bit more detail in a few moments. But before I do, there's a couple of points I'd just like to touch on. Firstly, a huge thanks to everybody who has put this conference together. There has been an enormous amount of work go on behind the scenes. I was fortunate enough to be a speaker in 2024 at REConnect. That was a wonderful, wonderful first kickoff for reinsurance here in Cayman. REConnect 2025 is bigger, badder, and better. So we are very excited. I know I speak for this panel, but indeed all of the panels during the course of today and tomorrow. We're very excited to be part of this and to introduce reinsurance here in Cayman to each of you. As David mentioned, there will be an opportunity to raise questions through the Slido app. I'm no tech guy, but my understanding is that they will be shot through to my phone. So time permitting, we'll address any questions that anybody has towards the end of the session today. Okay, I guess the other thing to mention is if anybody would prefer to raise questions outside the more formal environment of the panel today, then each of the panelists today will be at the Appleby cocktail reception tonight and generally milling around the conference for the next couple of days. So I mentioned that we have a stellar lineup of panelists, and I'm now going to introduce each of them to you. Immediately to my left is Brittany. Brittany Strong is a director at SRS, the insurance manager based here in Cayman. Brittany is a CPA and has worked in insurance management for 15 years here in Cayman, specializing in healthcare captives and, importantly here today, reinsurance entities. Prior to working in insurance management, Brittany worked in insolvency and audit at Grant Thornton and RSM, and also in audit in New York, where she hails from. Next to Brittany, we have Brad Mazur, who's the MD of Business Development at AM Best. Brad joined AM Best in 2016, and prior to that, he held various positions in financial services, including at AIG, where Brad was a senior MD in enterprise risk management. Brad also worked in senior positions at UBS, JP Morgan, Bear Stearns, and ZAIS Group LLC, generally involved in derivatives and structured products. Brad holds a BA in economics and mathematics from Emory University. Next to Brad, we have Arwaz Chigani, who is the president and CEO of Ocean View Reinsurance, based here in Cayman. Arwaz has over 18 years of experience in the reinsurance industry, with deep expertise in pricing, valuation, capital, and risk management. Arwaz currently leads Ocean View's operations in Cayman having previously served as CFO and Chief Actuary of its Bermuda operations. Earlier in Arwaz's career, he held senior actuarial roles at Argus Group, AIA, and Manulife. Arwaz is a fellow of both the Society of Actuaries and the Canadian Institute of Actuaries, a chartered enterprise risk analyst, and holds a Bachelor of Mathematics from the University of Waterloo. At the end here, last but by no means least, we have Lloyd Bolshaw, who is the actuarial lead at Deloitte, based here in the Cayman Islands. Lloyd is experienced in working with reinsurers at all stages, from startups to multinational listed companies. He has led teams in capital management, valuation, reporting and risk, and also driving the development and implementation of innovative solutions to modernize actuarial and financial programs. Lloyd's career spans diverse markets, including South Africa, the UK, Malaysia, and more recently Bermuda, the US, and the Cayman Islands. This global exposure has equipped Lloyd with an understanding of results and operating models across different regulatory frameworks and jurisdictions. I think you'd agree, quite the panel. We're in safe hands today, guys. Okay, with the introductions out of the way, I think we can jump in. And Arwaz, I'm going to turn to you first, if I may.
Sure.
I think an important point that you'll be hearing over the course of today is that reinsurance in Cayman is no new thing. It's been here quite some time. But what we've seen is exponential growth in the industry over the last few years. Would you mind just talking us through, please, Arwaz, what this growth looks like and what you're currently seeing in the market?
Absolutely. So over the last couple of calendar years, what we've seen in Cayman is about 83 new licensees and a total asset value now standing at about $153 billion. About half of that is life and annuity reinsurance business. The most of the growth that we've seen over the last few years has actually come through a life and annuity reinsurance business and overall like asset-intensive business. Cayman now forms about 10% of the U.S. offshore reinsurance market, which all these stats basically tell us that growth has been extremely strong.
Okay, that's fantastic. Thanks for that, Arwaz. And what are you seeing as some of the kind of key drivers that are underlying this rather spectacular growth?
Sure. So I think we have to focus on what happened during the global financial crisis and the interest rate environment after the crisis, which existed and has continued to persist since then. And what we have seen as a result of the interest rate environment is a growth in the asset-intensive reinsurance industry. Primarily what we're seeing is life and annuity business now not just on a block basis but also flow basis being supported by reinsurance. In the last few years we've also seen further activity in other forms of asset-intensive business such as pension risk transfer and now LTC. With all of that said, the growth in the business attracted capital and sophisticated capital structures. Great returns have been experienced, which continues to attract and fuel the growth. We have seen now transactions that are not just focused in North America, but also Asia and Europe. Cayman, in particular, has been able to capture some of that growth. And some of the reasons for that have been that Cayman offers very strong, prudent, risk-based regulatory framework with strong oversight from CIMA. There is a commitment by CIMA to pursue qualified jurisdiction status with the NAIC in the US, and a stable, very stable regulatory environment, in Cayman. There has been a strong presence of other industries in Cayman, including reinsurance, but other industries such as funds and banking, which, in my view, provides a natural ecosystem for insurance and reinsurance to grow. There are very strong service providers, law firms, accounting firms, advisory practices, which new entrants can plug into and use as an ecosystem to grow. Cayman also, with this proximity to the United States and Canada, being a British overseas territory, with the stability Cayman has had politically and economically, as well as being an English-speaking country, all these characteristics provide an impetus for growth. And then it also offers, modern infrastructure with respect to systems, processes, procedures, as well as hard infrastructure such as office spaces, residential spaces for companies to establish in Cayman and for their staff to be placed here. So with all of that, Cayman has been capturing some of that growth, and I believe will continue to do so.
Thanks, Awaz. You touched there on the kind of regulatory and business environment here in Cayman. Oceanview fairly recently got its license, and you chose to set up here in Cayman. Can you drill down a little bit into what it was with regards to Cayman's regulatory and business environment that you felt makes it a good place to set up Oceanview here?
Sure. So many of the reasons that I mentioned previously were the considerations, but added to that, we were also looking for a jurisdiction that provided stability with respect to the regulatory framework. And where that framework were to change, it was going to be changing more strategically to align the industry for growth. So those were the characteristics that we were looking for. Additionally, a commitment towards qualified jurisdiction was quite appealing for Oceanview. And then we were also looking to be part of a growing industry. We have other insurance companies in other jurisdictions. But we also wanted to continue to be part of the growth of asset-intensive business and growth of Cayman. So that's why we chose Cayman. Yeah.
Thanks, Awaz. Going to focus a little bit for a moment on the license classes that are available here and bring in Brittany, if I may. Brittany, there are essentially two license classes at current available for reinsurers, the B3 and the D. Can you just give us a bit of an overview of the differences between the two license classes, please?
Sure. So a good way to do that is to back up a little bit. So you've got your D license class, but your B license class can be a B1, B2, B3. In the B3 category, you can be anywhere from 50% related to unrelated business all the way to 100% unrelated, which makes it a very viable option for reinsurance entities, especially those that are just starting out. Whereas your D license, that's got to be 100% unrelated. It's a reinsurance license specifically, so there is no component for related business. Another component is that a D licensee will need to have boots on the ground. You need to have an office here in Cayman with employees running the day-to-day activity of your entity. Whereas a B license, a B3, can outsource that management to insurance managers. And there's a bunch of insurance managers at this conference and on this island that can help you with anything from feasibility formation all the way to strategic planning and dissolution should you find that that's the right solution for you in the end. But they can also help you transition if you start out as a B3 into a D license as you mature, if that's what's right for your entity.
Okay, so I guess that leads to the obvious question of, in your experience advising reinsurers, why would you choose one license class over another?
Well, the other consideration is that is the capital requirements. So with a B3 entity, your capital is going to be determined with a minimum capital requirement between $200,000 and $600,000, depending on the type of business you plan to write, plus a prescribed capital requirement, which is percentage of net written premium, and that calculation's in the regulations for you. A D licensee, however, is going to have a minimum capital requirement of $50 million and a prescribed capital requirement that's also laid out in the regulations via calculation. You can also create your own capital model there if that is what you want to have approved by CEMA. In terms of why you would choose something, it's really going to be a preference. If you're not sure about the volume that's going to go through your entity, or you know it's of a very limited scope, or you want to have a little bit of a faster startup time, then a B3 might be the right fit for you. Whereas if you're if it's a preference of the shareholder of the ultimate beneficial owner, or just the specific circumstances or the volume of transactions that's going to go through your entity, that you want to have boots on the ground, that might be the most practical option for you to start up initially as a D. Crucially, though, SEMA and the Cayman Islands do not have a cap on the value of transactions. It's going to push you into that new license category. So it gives you a little bit of flexibility so that if you do plan to transition to a D, you don't have to reject deals if you know that it's going to be a certain valuation. So you can work with your insurance manager to that pathway to a D, and they can help you with, finding office space, finding staff through a recruiting agency or immigration services, and help you with the application, to help you submit that into SEMA, and help you on that transition, should that be what's right for your entity.
Okay, thanks, Brittany. I'm going to bring Arwaz back in here. Brad and Lloyd, don't worry, I will come to you in a second. So Arwaz, we've heard from Brittany about some of the considerations of choosing a B3 and a D and vice versa. Conscious that Ocean View made the decision to come in here as a D right from the outset. What made you and your colleagues go down that particular route?
So we considered the things that Brittany mentioned, but the decision that we made with respect to a B3 versus a D was primarily driven by where we saw we would be in a short period of time as a company. And what we were projecting was that we would have a volume of business that would require us over a short to mid-term to convert from a B3 to a D. So we decided that, it was better for us as a company to come in as a D off the bat. Now, in addition to that, with the initial research that we did, the things that we looked at, with the Cayman industry and the success of existing reinsurance companies in Cayman, looking at that, provided us further confidence that we wanted to make a longer term as well as a more comprehensive capital commitment to Cayman. So that was another reason why we wanted to come in as a D and also establish an office and a presence of staff in Cayman.
Thanks, Arwaz. I think it's appropriate at this point to switch gears a little bit and start to focus on the capital regime here in Cayman. So I'm going to bring Lloyd in here, if I may. Lloyd, one of the key considerations when looking to set up a reinsurer is the capital model that's going to be applied. How does Cayman's capital framework impact the decision to domicile here in Cayman, in your experience?
That's a great question. Thanks, Jacob. So I'm going to cover it. Is the mic working okay? Can you hear me? I've got this backup one just in case. Me now, all right? Okay, good. So I'm going to cover a couple of subtopics within capital. So you've got your MCR, or your minimum capital requirement. That's the amount that's required to kind of get started as a company, and it'll depend on your license class and the type of business that you're writing. And then you'll get the prescribed capital requirement, which is typically a large number, is more risk-based, and will be based on the volume of business that's written. The SEMA prescribes a formula and an approach that you use for that prescribed capital requirement, kind of in line with a lot of regulatory regimes. But they also give you the option to apply to use an internal model. And that internal model is something that there's regulation around that application for that internal model. So you've got the initial review phase, you've got the application phase, and then you get the ongoing monitoring of that capital that's derived from the capital model. And what you'll see from that regulation is that it talks about a lot of things that are very familiar for actuaries who've operated in different jurisdictions. It will talk about 99.5th percentile confidence level, for example. So can you withstand a 1 in 200 year event? Now, for those of us who've been in other jurisdictions and actuaries, that's very familiar talk, right? 1 in 200 year events over a 1 year time horizon. People might talk CTE 99, close to a 99.5th percentile confidence level. And that's a requirement explicitly in the regulation from SEMA for your internal capital model. There's then requirements around documentation, around validation of that internal model, making sure that it's appropriate for your business, that it's calibrated correctly. And then ongoing, you've got the ongoing monitoring aspect, which is this model working as you intended? Should you up your capital? Should you recalibrate? and work that needs to happen around that. A lot of similarities through the internal model regulation to what might be seen elsewhere. Now, obviously, there's benefits to an internal capital model. You might be able to operate more efficiently, but equally, SEMA as a risk-based regulator might require you to hold additional capital over and above what the prescribed capital requirement formula might require. And through that, you get that protection of policyholders that is really, really important for insurers and reinsurers to make sure, yes, you're protecting policyholders, but if you should be holding a low capital and you can demonstrate that because, for your business that's more appropriate, then, you can get the efficiency from that as well. So there's both sides of that. In terms of Cayman, and jurisdictions in general, there's a heap of things to consider, right? So there's capital, there's tax, there's reserving, there's your product design, there's your reinsurance structuring, what capital are you targeting, and what credit rating are you going for? And all of those things kind of come together and becomes a pile of stuff that actuaries and other people in the business try and work through. We've tried to work through this, and we've built models to be able to help have a more eyes wide open approach to Cayman or whichever jurisdictions are being considered. And we find that eyes wide open approach has really helped with making those decisions and not maybe stumbling upon a result.
Thanks, Lloyd. It's really comprehensive. Thank you very much for sharing that with us. I'm going to pivot a little bit and talk for a few moments about the actual application process that anybody that's looking to get a reinsurance license here is going to need to submit, work with your service providers, and put through to SEMA. So Brittany, back to you here, if I may. Can you just give us a little kind of canter through, a high-level overview of what the application process involves and any hot buttons to look out for, please?
Sure. So your application is going to include primarily 3 key features. It'll be your business plan, your financial statements, and the due diligence. Your business plan is really going to be your operations manual. So you're going to be submitting this to the regulator. It's going to detail how you plan to do business, and you and your insurance manager will communicate with the regulator through your business plan and how you change it, and they're going to hold you to it. They're going to hold you to conduct business the way you said you were going to conduct business. In your business plan, it's going to lay out a whole lot of stuff. It's going to lay out everything that anybody would need to know about your entity. It's going to be the purpose. It's going to be the structure of the Cayman entity and the ownership, lines of coverage, cedents, registered office, service providers, compliance, AML, capital models, dividend investor return strategies, growth strategies, the works. So it's a very comprehensive document, and it's going to lay everything out there for anybody that needs to know that about it. Financial statements. They're going to require 3 years at a minimum of projections for financial statements for the entity. You got to have to include the details of the assumptions that you utilized, actuarial support for your reserving, capital calculations, any tax considerations. From a due diligence perspective, you may be required to provide contact information for your home jurisdiction regulator, and they may request a no objection letter from them for you to be doing business in Cayman. The due diligence, we understand, is often the most sensitive piece. Nobody wants to provide all that personal information. We do understand and we appreciate that, but just know that Cayman is dedicated to adequate know your client procedures and regulatory checks of all parties who are involved in entities that are regulated in the Cayman Islands, whether that's going to be your directors and officers who are acting on behalf of the entity or the ultimate beneficial owners. You're also likely to need to be providing at least some information for any entities between the Cayman entity and the ultimate beneficial owner. Usually there's a couple of layers there. But I know this is a lot of information. Know that there's insurance managers on the island that can help you go through each of these steps and create a comprehensive, complete, and sound application that you can submit to SEMA.
Thanks, Brittany. Very helpful. I think it's a good point to bring you in here, Brad, if I may. We've heard from Brittany about the licensing process, what it looks like here, so how you get your license from SEMA. Can you give us a little bit of color about how AM Best looks at new licensees from a ratings perspective, please?
Sure. Can everyone hear me? Yeah. So AM Best uses the same framework to evaluate startup carriers as we do to evaluate established insurance companies. That framework, which some of you probably heard of, is called the Best Credit Rating Methodology, or BCRM. BCRM uses a building block approach that considers, amongst other factors, the balance sheet strength of the carrier, operating performance, business profile, enterprise risk management, and then any potential lift or drag from a parent company. Now, the analysis is focused on a business plan due to the absence of a track record. And that business plan is required to be a minimum of 5 years in length, describe capital, provide detailed financial projections, as well as the strength and experience of the management team. Now, importantly, we have no explicit cap on the maximum rating that a startup carrier can receive. And in fact, plenty of startup carriers have received initial ratings in the A category.
Great, Brad. Really helpful. Thanks for talking us through that. Arwaz and Brittany, you both talked earlier about service providers that are here on Ireland, getting your team together, etc. Brittany, I'll throw this one back at you, if I may. Can you talk us through, just quickly, the roles of the different service providers when you put together your team to get your license through from SEMA? And in particular, also the quite heavy role, certainly on the B3 side, for an insurance manager here in Cayman, which is a little bit different to perhaps some other jurisdictions.
Sure. So a reinsurance entity are going to want to appoint, particularly a B3, an insurance manager, a Cayman auditor, a Cayman legal representative, actuary, peer reviewing actuary, tax advisor, Cayman Class A bank, and you'll also want investment management and custody, but those relationships can reflect your preferences onshore. That does not need to be a Cayman-specific service provider. From an insurance manager perspective, your insurance manager can be as hands-on as you want them to be, or partially hands-off. So we can really customize the amount of service that you're receiving. Some clients need a full range of services, whether it's from feasibility and formation, operation, assistance with service provider selection, full suite of financial statement preparation, audit, liaising with the regulator, registered office, compliance, AML. There's a lot that your insurance manager can accomplish for you. There is some of it, though. Some entities have onshore offices with maybe an actuarial team or a finance team or secretaries that can do some of these pieces onshore, but it's very crucial for you to work with your insurance manager to make sure that you're doing the items in Cayman that need to be completed in Cayman for economic substance compliance. But it's really just your insurance manager at a minimum will be liaising with the regulators and making the filings that are required on an annual basis of a Cayman entity. Typically, they will also handle financial statements and audits because the auditor's based in Cayman. And also they'll be the registered office, compliance, and AML. However, registered office and AML can also be handled by local legal counsel if that's your preference. In short, your insurance manager is helping you steer the ship and keep it on course. We take the direction of the board and we implement their decisions as effectively as possible.
Great, thanks for that. I think I'm going to pivot again a little to some of the actuarial considerations around setting up here in Cayman. Lloyd, certainly your area of expertise. Could bring Arwaz in here, but I think this one falls for you. What are the Cayman-specific requirements for actuarial involvement, please?
Yeah, thanks, Jacob. So I think there is a point here to be made around doing the homework on what is available on SEMA's website. So you'll see that there's rules and statements of guidance around risk management, around stress and scenario testing, around the valuation report and everything that goes into that valuation report. There's a heap of actuarial stuff to nerd out on in the actuarial report that needs to be put together. I spoke about the internal capital model. There's statements of guidance around your investment activities and things like ALM. And then there's obviously your regulations and your insurance laws that need to be considered. Now, I also want to talk a little bit about the roles that actuaries play in Cayman, because there are many, and it depends on your license class and your size and the type of business that you're writing. But you've got your appointed actuary, and that's the person who's responsible for that valuation report, experience investigations, the assumptions, the methodology, the stress and scenario testing, all the actuarial stuff that goes into that. You've then got your peer review actuary, who's someone independent, and they will report to SEMA. They've got a safe space to challenge stuff that's been put together in the valuation report. You've got your auditors. They will have findings. They'll have things, or hopefully not. They might have findings. They'll have things that they want to address and speak to you about. And then over and above that, SEMA and we've seen it might require an independent review actuary. So an independent review actuary to make sure that what's been approved by SEMA has actually been executed on by the insurance companies. So there's a whole lot of roles that actuaries play on the island, and you might wonder, well, where's the actuarial talent? And actually, the number of actuaries in Cayman has pretty much doubled over the last couple of years to over 70 actuaries. And that's fantastic in terms of not just the individual skill sets, but the cross-sectional skill sets that come together with all the different backgrounds of actuaries that come onto this island. And you'll see if you chat to actuaries that are here at this conference, you'll see that there's these diverse backgrounds, but a good coverage of different jurisdictions, making sure that the best thinking is being brought onto the island. Now, another comment is that companies really care about their credit rating quite often. And if you think of, for example, the AM Best framework, it's got the qualitative stuff that I'm not going to talk about as an actuary. I'll talk about the quantitative stuff. That similarly is on a value at risk, with the value at risk type framework at different confidence levels, one of which would be your 1 in 200 year confidence level that comes up again. So you asked the question, what are things that actuarial considerations in Cayman? I think what I've described is a lot of things that actuaries, regardless of where you are, need to have in place for the actuarial sound running of an insurance or reinsurance company. A lot of those principles that exist in Cayman. I do encourage people to go onto the SEMA website and see what's available to see that.
Thank you, Lloyd, for talking us through that. Going to bring Brad back in here. Brad, if I may. We've talked in quite some detail today about the attractiveness of the jurisdiction for, somewhere to set up your reinsurer. I'm sure each of our audience members today would be interested to hear from your perspective at International Reinsurance at AM Best, how particular domiciles are evaluated and in particular any insights that you can share with us today regarding Cayman in particular.
Sure. So first, AM Best evaluates country risk as opposed to sovereign risk. And the metric is called country risk tier, which is known as CRT. And CRT really has 3 components: economic risk, political risk, and financial systems risk, with financial systems risk being further divided into non-insurance and insurance risk. So the economic risk piece would address factors, as you would imagine, like the state of the domestic economy in a domicile, as well as government finances. Whereas political risk would address a variety of factors such as the strength of the legal system or societal and governmental stability. Now, within financial systems risk, the non-insurance component would also look at multiple factors such as the strength of the banking system and non-insurance reporting standards, whereas the insurance risk would look at factors such as supervisory authority, insurance regulations, and then the insurance reporting standards. So as it relates to Cayman, Cayman is currently CRT2. So it's a 5-point scale. CRT1 is the highest, CRT5 is the lowest. So Cayman is the second highest in that scale. And as context, other jurisdictions that would be a CRT2 would be, for example, New Zealand or Bermuda. And you can find the full list of all of our country risk tiers on our website for free. It's available to the general public, so everyone can get a good sense of what is a CRT2 versus other country risk tiers.
Great, Brad. Thanks for that. I'm conscious of time, folks. We are making good time, but we do have some time for a few questions. I'm pleased to report that the Slido is working, and I'm getting some questions here. So I'm just going to take a little look at what's come through. Okay, Arwaz, you seem to be very popular. So
Okay.
there's one here for you. Could Arwaz, speaking to the process involved in setting up a D-classed entity here, could you talk to timeline, processes, etc.?
Sure. So
Maybe Brittany would like to chime in on that as well.
Yes, absolutely. So a lot of things that Brittany has already covered are required. I think the critical components that I'll talk about, which ends up becoming something that takes more time, and sometimes, what insurers may think that, is taking a little bit more time from the regulator to go through, are associated with business plan and due diligence. Now, in terms of the business plan for a Class D entity, I think it is very important to be very clear about what type of business the company will be writing, what type of risks the company will be undertaking, how will those risks be managed, who are the capital providers, what are the capital commitments, and how much capital would be provided initially into the entity, and as the entity grows, what are the commitments for capital. If the company is pursuing an internal capital model, then being very clear on what that internal capital model is in detail with a lot of transparency to the authority, so the authority can clearly understand the company's proposal and the things that were spoken about by different colleagues about, what are the necessary things that should go into the capital model that makes it very clear for the authority how the risks and capital are related. The other aspect of it is associated with the type of assets that would be used by the company as part of its investments to back the reserves, for example, and being very clear about what those investments are, and if and providing a description of the structures that would be utilized in the investments. That also all ties back to the risk management framework and the capital framework. The other aspect of licensing, which takes entities some time and it can slow down the process, is due diligence. So providing all the due diligence material up front makes it very easy for the authority to go through the application, understand the key people involved, the key organizations involved, and approve the application. But if due diligence material is not provided up front or it's delayed, then it can delay the process. So from what we have seen, the authority has actually been very good at going through the material very quickly, asking important questions, and being very quick about asking those questions. So the delays often occur with the licensees providing information late or not on time or not asking questions, because that kind of stops the clock, so to speak. And then once the answers are obtained by the licensee, then the authority, restarts the clock. So I think those things are critical with respect to the licensing process. Brittany, do you want to add anything?
No, I was just my main point would have also to have been say that the timing of it is always going to be dependent on the quality of the information that's originally submitted. So the quality of information we receive from a client, if we, request something and they give us something that's sort of half of what we need, then that's going to obviously cause questions. We usually try to complete that and push for it, but a lot of the times we don't get the full information that's required, and that causes those questions. And the more questions and queries you get from SEMA, the longer it's going to take.
Yes, and I think from an actual standpoint, I think Lloyd has already covered the ICM, but also submitting, stress testing of the frameworks together with the internal capital model that's described in the business plan is very helpful, because it enhances the authority's understanding of the business.
Thanks, folks. I think you pretty much covered this next one, but I'll shoot it out there, and perhaps either Awaz or Brittany can add anything else. Regarding licensing time, what factors could cause delays, and how can we avoid pitfalls to expedite execution? I know you've touched on some of this already, but is there anything else you'd want to share with the room today on that?
I think just being initially informed, talking to the great service providers that exist in Cayman who have helped a lot of companies go through the licensing process, so you are prepared in terms of how to position the application, would be critical. Also talking to the authority in the early stage of the process, so you understand, based upon the business model that you're proposing to the authority, what are the additional steps the authority may want to take to get the to issue a license to the company, as well as, you know, any other requirements that the authority may have, which are sort of ad hoc or more related to the proposal of the licensing.
Great. Thanks, Alwas. I think we've got time for a couple more. I think they both seem to be in your wheelhouse, Lloyd. Are there cases where the PCR isn't risk-based?
So I think what they might be referring to is the B3
I think so.
PCR equals MCR part of the insurance regulation. So I think if you look at that same section of the insurance regulation, it says that CIMA can require you to hold additional capital, and being risk-based, they do and they have. If that's the appropriate amount of capital that needs to be held to cover the risk. So it is a B3 specific that I think they're referring to the PCR equals MCR. Outside of that, you have got the formulas involved around the size of your business, the class of your business, that, you know, it will take into account your assets, your liabilities for certain classes. There is the B3 long term. CIMA, of course, don't allow you to have 400,000 if you're operating a huge entity. They will look at the risks that you're running and require you to hold the amount of capital to that risk.
Okay, fantastic. And last one, again, I think for you, Lloyd. You mentioned that internal capital models could be used to derive a more appropriate amount of capital. Are you actually seeing reinsurers successfully use internal capital models for regulatory purposes?
So yes, I think there's a global trend coming off the back of all the regulatory change around capital and reserving and reporting. So a lot more attention now into internal capital models just globally. So yes, we definitely are seeing a successful use of internal models. There is that review element and the ongoing monitoring that needs to happen to make sure it's appropriate. I think it is helpful to go through an internal model application process, whether accepted or rejected, because your company ends up understanding your risk on a distribution. So you're not looking at a best estimate and a factor, multiplying that through and calling it a day. You're actually understanding the risk that your business is running, and you're monitoring that on an ongoing basis. And by going through that process, you find you're a lot richer in terms of your understanding of your risk and your exposures through that process. So yes, and a little bit more.
Okay, thanks, Lloyd. We have a few minutes left, so let's just take one more, if we may. So this, Brad at AM Best and Brittany, due to the fast growth of insurance in Cayman, do you see additional regulations being considered for the jurisdiction? Big question.
That's hard for me to say, I think.
Yeah.
Yeah, similarly, similarly, it's not my place to tell CIMA how to regulate the industry. However, with the prospect of us gaining NAIC equivalency, or us seeking that, there may be something down the road, but at the moment we are not seeing anything specific yet.
Okay, well, before Serena bashes me over the head and tells me I've got to get off the stage, thank you, panelists. Great job. Enjoyed moderating you. Thanks for your time. Audience, thanks everybody for being with us today. We hope that you found the session insightful, and we hope that you enjoy the rest of the conference. Thank you.
Thank you.